right, we are live. Good morning. Good afternoon. Sorry. Okay, I always get it swapped up. Good afternoon. Welcome aboard to the aftermarket recap. My name is Carlos Garcia, founder and CEO of G.A.R Capital. Thank you so much for joining me today and every afternoon at 5 p.m. Eastern Standard Time. It is right around 5 p.m. Eastern Standard Time, January 27th, 2022. Thanks so much for joining me. Before we begin, bottom right-hand corner of your screen, click on that white logo, turn on notifications, subscribe to our channel. Make sure to click like if you like these videos. Really do appreciate it as always. So we got a lot of things to talk about. So let's go ahead and start quickly with the markets. The Dow was down about 7 points, pretty much flat. The NASDAQ fell 1.4%. A lot of that was Tesla. Tesla had an ugly day today. S&P down 0.54% at 4326. Again, we know that Tesla's weighted on that. If you take a look at the equal weight, they was pretty much equal. So the S&P 0.56%. The VIX down 4.6%. Interesting enough, even though we were red today in the NASDAQ. That was something that I was kind of keeping my eye on. We're going to go over the VIX here in a second. We have the dollar bounce today. Well, it soared, and we got some key levels to look at that I talked about on Twitter. So if you haven't followed us on Twitter, make sure you do at G.A.R Capital. That is up 0.87%. Yields were down. So I'm going to go ahead and write all my notes here. Yields, we're going to go over yields as well. Down 2.22% on top in terms of TNX was the 10-year yield, 10-year Treasury yield. Gold was down 1.29% on the ETF. Silver was down 3.22% on the ETF. High yield credit down 0.44% at 84.44. LQD, which is the investment grade bonds, they were up 2.23%. Dow futures are actually up 0.5%. Futures are closed. Looking at Apple is starting to run now. Let's take a look at that. Pretty important to see. Russell was down nearly 2% today as well. I have IWM calls for next week. They were down 2.27%, but still above support. Interesting. Very, very crucial to look at that. But now Apple is igniting. Let me go ahead and tweet this out. There goes Apple. Let me take a look at exactly how much it is after hours. Apple's now up 5%. Up 5% after hours. So there you go. You can see in the bottom right-hand corner of your screen, we also had some Visa earnings that came out. I think that's basically it for the day, other than crude being down 0.07%, 87.29. We know our target, $100 a barrel. Gasoline was up 2.55. That's $2.55. That's up nearly 1%. But Apple is starting to push. So let's just dive into the Apple call like we did for Microsoft and we did for Tesla. We'll go ahead and go over Apple. Apple's starting to soar now. You can see 167.50. We're breaking above it. Wow. First of all, this is well deserved. Apple is an absolute beast. They had not just a great quarter, an incredible quarter. Here's some numbers to kind of blow your mind on how great Apple did. Let's give you guys a little bit of context. Apple generated $15,600 in revenue per second. That means you blink your eyes, they made $15,600. Let's break down the numbers. That's really crazy. Real quick, they declared a quarterly dividend of 22 cents a share. You don't own Apple for the dividend, even though they pay it. I'm an Apple shareholder. I don't give a damn. That's fine. But keep in mind, they're on their conference call right now, so I'm looking at it as we go. But here's a breakdown of their numbers. Fiscal year Q1 sales by segment. Apple iPhone, $71.6 billion in sales. That's 9.1% year over year. Keep in mind, this is without a super cycle. What is a super cycle? That is an update of the actual model. So again, the 12 and the 11 are very similar except for the little camera. That's basically the difference. So that's in between super cycle, not a super cycle. The iPhone, I think we are at, no, the 12 and the 13. Are we in the 13 now? Whatever. The next one, which will be this year, more than likely it's every 2 years, should be the super cycle, meaning the newest one, like a redesign. So think of it as a car, every 4 or 5 years they redesign the model. Apple does it every 2. I usually update my phone personally every 2 years to keep up with that cycle. I did not update my last phone this past year. I did update it in 2020. So, that's kind of how most people do it. So again, that's how I kind of do that kind of barometer. For iPhone sales, 9.1% year over year is really excellent. Services, again, this is cloud stuff. This is the services stuff. Subscriptions, Very important. Those are reoccurring revenues. 19.5 billion, up 23.4% year over year. We talked about with Microsoft, up 20% is excellent. Wearables, homes, accessories. This is the HomePod. This is the Apple Watch that I'm wearing. 14.7 billion, up 13.1% year over year. This Apple Watch I bought in 2020 at the end of the year. So again, I'm still holding mine. I love the Apple Watch personally. I don't wear it every day, but if I work out, I do. Mac, this is all the Mac products, MacBook, iMac, all that stuff. $10.9 billion in revenue. They were up 25.3% year over year, which is really great. That really shows a demand for their products. They did have the new Apple iMac released. I think they updated the MacBook Air. The Pro should be updated soon, I believe. The only one that was down was the iPad, $7.2 billion. That's up 14.3 year over year. So again, I don't think most people upgrade their iPads as much. I think the ones that everyone upgrades for the most part is really your phone and then your watch, the wearables. I don't have the HomePod or anything that's up for the house. I don't have the speaker or anything. But as someone who's a big Apple consumer, that's my favorite company in terms of products and stuff. Again, I always say invest in what you consume. That's a really good idea with Apple. My whole IRA is Apple. Like my IRA is just one stock, and that's Apple. The Mac is, again, another one that I've had this same iMac that I'm speaking to you on since the tail end, actually since 2018. So I haven't upgraded it because this is the 27-inch model, the 5K display. They have not made a 5K display refresh. So Apple, if you can hear me, congratulations on your quarter. Let me know when you do a 5K upgrade so I could buy one, because it's an amazing machine. It really works just like it's out of the box. But more than likely, guys, Apple's important because more than likely you're a shareholder. You probably have Apple on your portfolio. You probably have Apple in your IRA or your 401k. Most, if not all ETFs, if you have like a total stock fund, an S&P index fund, you own Apple. If you have a tech ETF, more than likely you have Apple because it's just that large. And I hate to say it, but companies, the two big behemoths, the strongest ones, the best balance sheets, best management, Apple and Microsoft, steady as a rock. Microsoft was up today 1.05% after being up nearly 5% yesterday. Well, it ended the day around 3%. But again, these companies, again, there's no funny business. They make money, they sell products everyone wants to own, great management, they return capital to shareholders with dividends and stock buybacks. You can't. Those two are pretty much should be the bedrock of any portfolio long term because they're so damn stable. Now, are they the best companies out there? I would say so, but there's so many other ones like that. So if you look at a Berkshire Hathaway, if you look at a J.P. Morgan, if you look at a United Health, which is the largest component in the Dow Jones, I just found out today. These companies are doing okay. They're doing fine. Again, don't let Robinhood, which sunk today, which was trash, and I never bought it, and I told everyone I'm not interested in it, went from $88 at the high, keep in mind, $85 at their peak, to $11.61. It was, $10.38. It was actually below $10. That's where Robinhood went. So I would say the best thing you can do is find the quality first on a downtrend that you've been wanting to buy. Microsoft, I bought on the dip. Apple, I bought with my IRA on the dip. These are solid companies. I'm waiting for UNH to break below 400. I don't know if that will happen. But again, these are solid companies. Don't let the noise of the SPACs, don't let the noise of the high beta growths be everything in your head. Apple is killing it. Microsoft is killing it. Visa had a great quarter. American Express had a great quarter. United Health had an amazing quarter. There's good companies out there. The problem is that people don't look for that boring quality. I would actually say Apple is pretty much as value gets, but again, there's still a growth name. But again, we're always focused on the aggressive growth. That's probably the number one question I get is all the aggressive growth names, the high betas, those names. Again, that should be a small slice of your portfolio, not everything. But again, Apple here is showing you the price action that it deserves a higher price. Now we're rejecting the 200-day moving average on the hourly. I expected Tesla with their great quarter to soar. They did not. They fell, and really the issue was just guidance in terms of the supply chain issues. So more likely we're going to check back to 813, which is your 200-day moving average on the daily. Again, I've always said that 200-day is a good level to look at. I bought some more Tesla today. I'm down on it just on the buy today. That's fine. 800 to 813, I will load up on some more Tesla. I think Tesla had an amazing quarter too. Obviously, they have free cash flow. They're not cash burning anymore. They're not, not to the point where people were thought they were insolvent. They make great motor vehicles. Again, number one selling EV anywhere, period. Tesla is a bedrock. That's a good company to own. Maybe years ago, people were a little worried about them, but Tesla's obviously know what they're doing. Elon Musk is doing a great job. And of course, with supply chains fixing down the line, it won't be like this forever. I think Tesla has a lot more growth to the upside. Apple did not give guidance. They will not provide forward guidance, obviously due to supply chain issues. They don't project beyond the current quarter because of supply chain issues, but they say that supply chain problems to lessen in current quarter. This is from Tim Cook himself. If you want to read that, go ahead and take a look on on Twitter. That's where I reposted everything. The revenue loss expected based on supply chain issues for the quarter was right about $6 billion. So if you just added that supply chain issue constraint, remove that, and you put that to the bottom line, that's another $6 billion in revenue. So again, I've said this before and I'll say it again. The hardest thing to do is to create demand. You cannot create demand artificially. You can create profits artificially if you just cut as much as you can in terms of overhead, in terms of employees. That's why I say revenue, you can't fake sales unless there's something like a one-off in terms of like some kind of tax savings or something like that. That's different. But revenue, sales matter. Sales don't lie. That's why Apple's up. They had great sales. Now, in regards to Tesla, their thing was a supply chain issue and the forward guidance. So that's why the stock was slammed. But I do believe there's some value long term. I think we'll look back at 800, 813 as a pretty good buy level for Tesla. And Apple here at 166 after hours. I mean, this stock should get back to 200 to get above 180 easily. But again, if they keep these numbers up, we'll get back to 182 by the end of the year. No problem. Again, if they keep this going up, which this kind of reporting, this kind of revenue, this kind of profit, their profit margins were absolutely crazy. They have about $202 billion in cash on their balance sheet. And remember, Apple did close a lot of locations during COVID, during the Omicron variant. So again, a lot of headwinds, but again, they smashed through them. So again, kudos to Apple. They did very well. Tons of stuff to go over. So with that being said, let's take a look at the heat map today. Heat map today, again, you get Tesla, the big loser on consumer cyclicals, 11.5% to the downside. Semiconductors took a hit. Intel being the worst with their earnings. They were down. AMD was down. I thought AMD would continue to go up. It did not. Nvidia was down as well. Berkshire Hathaway, pretty stable, down 0.51%. Visa had a great quarter. They're up after hours. MasterCard had their earnings. They were up during the session. Microsoft, we know they had a great quarter yesterday. I think it was Tuesday, up 1%. So again, energy leading the way, healthcare leading the way, Netflix up due to Bill Ackman taking a stake in the company. Real estate was down. We know why. Future interest rates going up should dampen demand for real estate. Kind of a grand reset. But again, interest rates were actually lower today. So again, that should be a little boom for real estate moving forward, since we really haven't broken out any meaningful levels in terms of the yields. So let's take a look now at a couple of things I want you to look at in terms of macro. Let's take a look at the VIX together. This is the Volatility Index. Again, this is pretty much like the fear gauge. So looking at it here, 3049. It was red on a red day. Interesting. So again, not a lot of fear. Again, if we break below this 100-day moving average, which we have not broken below since I believe 2 weeks ago, and that's really when things started heating up to the downside, right? This spike was from Monday, which was the craziness, came back down, but again, it's been holding up above the 50. We broke below the 50. Now we're near the 100-day moving average, below 27.93. That's a really good sign. I think we're getting closer to the bottom than anything else. This is what that tells me. Again, you don't have insane, indiscriminate selling like Monday. Today, you had some selling with Tesla and their earnings in terms of their guidance being to the point of supply chains being weak in their eyes. Let's take a look at the Dixie. This is the dollar index. Again, exploding up. So I put this on Twitter. So next level up, and this is a weekly chart, is right around 97.71. That should be our resistance. If that does break, we're going to get to $100. And again, 100 being 100 reading on the dollar. Now keep in mind, the Dixie is just a combination against the baskets of other currencies. Euro, the British pound, the Aussie dollar, the Japanese yen. Swiss francs, so on and so forth, right? And the euro. So looking at it here, we can look at in terms of like dollar yen and all that stuff. You could see if I go and bring up the dollar index, the dollar euro dollar, you could see how much it's gone down in a weekly, obviously, because the dollar has gone up in value. So we take a look at dollar yen, and again, the dollar's gone up. And usually the dollar yen is an indication of a risk on environment, but we don't have that right now. Obviously, that we hit near correction territory in the S&P. We're almost at a bear market. We're at a bear market on small caps. The NASDAQ is down more than, I think, 12, 13%. So again, this doesn't really matter. At the end of the day, it doesn't really correlate in that matter. But the dollar being up does hurt commodities. So again, the dollar goes up, that's going to hurt certain commodities other than oil. Oil is in its own world because their assets or their commodities are really controlled. There's no control on gold. There's no control in terms of Bitcoin. Oil can be pumped. Gold can be mined, but again, it doesn't have the utility the way crude oil does, meaning driving, flying, what have you. Gold is just a precious metal they use to hedge inflation for the most part, or you're just collecting or you just wear it as jewelry. But 97.71 of the dollar is extremely key here. That should be our resistance point. That'll get us back to July 2020, June 2020 levels, again, during the throes of COVID. Once the dollar starts spiking, the word inflation and dollars being worthless should be thrown out the window, because that's not the case. The market is not telling you that your dollars are getting weaker or that inflation is persistent based on the dollar. The dollar is actually gaining in value according to everybody, now according to the rest of the world. And this fact that inflation is not an American problem, it's a worldwide problem. It's a global problem. Again, supply chains are hurting this. It's nothing to do with any kind of stimulus. We've had stimulus many times. That's nothing new. We had that in 2008. We had it in the 2010s. Tax breaks. If the case of inflation was stimulus causes inflation, then every tax cut that we give for wealthier individuals and business owners would be inflationary as well, because that's flooding the market with more money, right? More savings in your pocket. So I don't agree with that sentiment. But again, what we have is once we have the global economy in terms of the supply chains working again, you'll see inflation come down and you'll see the dollar kind of stabilize. But right now it seems that 97.71 seems to be that place. We'll see where we get from there. TNX here, this is the 10-year yields. 1957 is a huge level in terms of the weekly. That's 1.95%. Again, getting close to 2%. We got as high as 2.8% back below in 2019. This would be matching basically the highs of 2020. They'll be the highs of 2020 before the collapse of yields. That's where we are in terms of that. So understand that we got really at a low point during the COVID, right? I remember it was like about 0.5% on a 10-year yield. It almost got down to about sub 4%. So sub 0.4%. So all we're doing is really just getting back to pre-COVID levels. That's really not a terrible sign. Again, the interest rates were pricing in Armageddon, recession, but we're not in a recession. We just had a great GDP reading. So again, expect yields to go up. If you were trying to lock in a mortgage, more than likely this is the time to do it before you start getting above 2% on a 10-year. And remember, that's the basis of mortgage rates. So again, banks down the line are going to be interesting. Watch the banks. Financials, they're going to be the difference maker in terms of portfolio, because higher yields gives them higher profit margins. That's a lot to say. Let's answer your questions. Let's see. GS says, hey Carlos, he's asking, Tesla, the trade desk, Apple, Microsoft, Amazon, anything to buy this week? I bought Amazon last week. I bought Microsoft last week. I bought Apple last week. I don't own the trade desk. I bought Tesla today. So that's what I did. And again, it wasn't all in or anything. Just going and scaling in little by little, not little by little, but a good amount. So nothing really too crazy. You don't go all in on anything. Again, average a price that you think is best. Apple added a cash dividend of 22 cents. Yes, I did quote that. The 22 cents was unchanged. But again, if you're owning Apple, you're not really doing it for the yield. G.A.R, do you see a triple bottom on ES? Technically, on the hourly, I do. But if we take a look at the daily, and I said this yesterday, I know, to a fault, right? that 42.60 was the low. I think 42.60, I called it. Now again, I could be wrong. I've been wrong many times in life. I'm used to it. But again, I'll stick to my convictions, 42.60 being the low. And if we break that, 41.16 is left. And then really, I would say Armageddon, I mean, complete financial reset in terms of stocks is 4,000. I don't think we get there. I think we get to 42.60. That'll give us, that's right around 10.6% from the highs. That's correction territory. I don't think we go to a bear market. I think we go to correction and we move on forth. And then next year we'll get another one. So again, it's the same, rinse and repeat, guys. Nothing really changes. But 42.60 is the low here. That's the low from Monday. That's the low from October. And you can take a look at the hourly and you can see that 1, kind of 2, and 3. But again, we're knocking on that door. Apple helps, don't get me wrong. Microsoft helps, don't get me wrong. But Tesla's earnings wasn't the best. Maybe we get some dip buyers coming in. But a nice little pop on S&P futures. Maybe we gap up tomorrow and get green. But again, we need 44.42 on the S&P futures. Once that happens, we should get to around 4,500. Above 4,500, I think most people can breathe a sigh of relief. I will go ahead and show you the Fibonacci levels to kind of give you an example of what I see in terms of that. So let's go ahead to the hourly. We got the top here, 48.08. Feels like so long ago, right? So we click once and we go all the way down to the wick low, which is right around 42.12. So all we are is knocking in on that 23.6 fib. Now again, you can have it upside down however you want. But again, 44.42, pretty close to that 38.2 Fibonacci level, which would get us to 4,500, which is 50% retracement from the highs. That's why 4,500, 45.10 is extremely important. We'd be on the correct side of coming back, but we're still on the opposite side. So think of this as football. These are your yard lines, right? So we're basically on the 20-yard line. I'll call this the 20-yard line or the 25-yard line, whatever you want. We got the kickoff. We're back at the 25-yard line, but we got to make it all the way back to the touchdown level, which is all-time highs. So unless you're Patrick Mahomes and we get some kind of craziness in, a couple of days, which won't happen, but again, we're just going down the field. So again, 44.42 would be a nice first down. Again, using the football analogy, we'll be at the 50-yard line. 4,500 could be interesting. Once you start getting to 45.80, now we're starting to get into the red zone of the market. Now, I don't think 48.08 is the all-time high. It is. Wow. How about that, guys? Huh. We were at all-time highs less than 20 days ago. Ain't that something? So think about that. We lost about, on the S&P futures, right around 10.5% in less than 20 days. Usually those moves don't last. Those kind of sales don't last. That to me, as you can see, we're basing at the bottom here, 42.60. I think we're starting to create a bottom. And again, usually you get the most violent rallies in a bear market. That's true. We do get some back and forth, but today was a little choppy. We'll see if we can get above 44.42 by the end of the day. Tomorrow, that remains to be seen. Apple should help. It'll be worth a couple of points in the S&P. But next week, it's really interesting. We have non-farm payroll report, another employment report next week. We have AAPL next week. So again, some stuff to look forward to as more news comes in. If we have a great employment report, jobs are good, we're probably going to go ahead and raise rates on March, which is pretty much a certainty, unless inflation is really down on the CPI, which we don't have next week. We'll have it the week after, if I remember correctly, usually the second week of the new month. So again, nice to see where we are currently on ES. Again, we're pretty much just kind of holding base, meaning we're in a nice range, 44.42 to around 42.60. That's about 180 points. Usually ranges go from about 80 to 100 if you trade futures. You just got to get used to that. There's a lot of volatility, big fall. Let's see where we go. Again, let's just treat it like football, guys. Right now we're at the 25-yard line. Let's see if we can get to the 40-yard line and get 44.42. Get a first down, go to the 50-yard line, which is 45.10, which would get us into enemy territory or opponent territory. And then, I don't know how I would equate a field goal to S&P futures, but I mean, again, it's step by step. We'll see what we get. But again, Apple I think had a great quarter. Microsoft had a great quarter. Tesla had a great quarter. Visa had a great quarter. Again, focus on the guys that had great quarters that actually beat. Again, tons of them out there. American Express did well. United Health did well. They're all out there. But again, we focus on, the high betas that got smashed. That's just the way it is in the social media world. Everyone's going to talk about Robinhood. No one's going to say anything about Apple. Apple had a great quarter. I know. Remember what I told you? Pessimism runs everything. It's all about the world's going to end. Sound the alarm. Actually, I don't feel scared one bit. I think that Apple's quarter was excellent, and I'm happy to see that. If Apple were to make an acquisition, what would it be? I think if I was running Apple, well, it probably wouldn't make a lot of sense in terms of money. But I think Apple acquiring Disney would be great. Not because I just own Disney, but again, I think it would be a nice meeting of everything. Remember, Apple used to own Pixar. Steve Jobs created Pixar. Disney bought it. So again, it's not like they don't have any kind of relationship anymore. Maybe they do, again, but that's $250 billion that Apple would have to spend and sell stock to them. So I don't think they're going to acquire anyone at this point. Maybe some kind of smaller company that makes a certain part or something like that, or peripheral that they want to acquire since they have so much cash. I think a better use of their capital would probably buy back stock at this level, since right now we went from 190, 182.94. Let's call it 183, just to make life easy. 183 to 165 now. Let's see what that is. 185 to 163. They'd be getting nearly a 12% discount from where they are currently. So again, you could see that a 12% discount, if they bought shares here, buybacks, they know what they got. They'd make a nice pop, and that would help their bottom line. So I think there's a better deployment of capital for an Apple than just acquiring somebody. They don't have to. Microsoft did. They're acquiring Activision, which the deal has not been approved yet. So slow down, Call of Duty players. I know I'm on that boat that Microsoft will save the day and save Warzone, because it's glitchy as hell. AMD or Intel, which one would you choose? I would choose AMD. Every day and twice on Sunday. I talked about Intel yesterday. Again, Intel pays a nice yield, but the growth prospects aren't the same the way AMD's are. What's the correlation between the dollar value and the stock price? If you're talking about the dollar itself, like the Dixie, the dollar, again, the higher the dollar, you got to understand that hurts multinational companies. Again, because the other currencies around the world are weaker than the dollar, that hurts them for exchange when it comes to doing business. So, you got to understand that a weaker dollar helps aggressive growth companies, overseas multinationals, but it hurts, lower dollar hurts like the banks, for example. So you kind of want a cheaper dollar if you're doing business overseas. You don't want a firmer dollar, because if you're selling iPhones in Japan, you're pricing them in yen, not in dollars. You kind of want to keep things as consistent as possible. What do you think about residential real estate in Ocala, Florida long term? I think Florida's fine. It's starting to get to the point of a little madness. Too many people coming. I hate to say that. Florida's a great state. But yeah, you have an influx of people, which brings up prices. I don't know Ocala personally that well. I think there's smarter people out there that can answer that question, real estate experts. My area where I live is right near Melbourne, Florida, which is about 45 minutes away from Orlando. So again, our property value has gone up, mine and my wife's house. So again, is that sustainable? I mean, we'll see at the end of the day. But I haven't found a good real estate deal. I'm trying to buy another property to rent out, but it's been very difficult sledding because a lot of cash buyers, a lot of high bids, and a lot of the sellers are really asking above appraisal. So it's not the best time to buy a house. Maybe, you're paying a lot more. You're paying a premium, kind of like buying a used car or a car right now. You're paying a premium just due to supply. There's a lack of houses. Now, once the market is always self-healing in a sense that when you lack supply of something, companies are going to do what it takes to make more, so they'll make more houses. KB Homes, D.R. Horton, they'll create more neighborhoods and more homes. They're building more homes across the way from me. So imagine that supply and demand should level off over time. I can't give you an exact time when that will be, but everything usually stabilizes over time. Again, oil prices will stabilize after $100 a barrel. All these other countries are going to see $100 a barrel. They're going to get greedy. They're going to pump. They don't care about OPEC. And guess what? We're going to be flooded with tons of supply of oil that, maybe we don't need. And then what happens? Prices go down, name of the game. Let's see. Apple Car. I didn't read anything about the Apple Car yet. If I see something, I will tweet it. What do you see from the chart? Where can be the bottom for SoFi? Okay, let's do that. SoFi. I'll go and expand this to make life easy. SoFi. Ooh, okay. Let's see. Let's expand it. SoFi. The lowest it could go is $10.10. $10.10. That's the lowest I got. I don't own any SoFi, so $10 I guess would be your support, massive support if you want to go and buy it. Kind of a triple top scenario here, but again, guys, if you're a type of person that wants to add a little bit of risk and you're a long-term investor, you're not worried about the short-term stuff. Again, the names like SoFi, ARKK, the high flyers, Robinhood. If you're interested, I don't want to own Robinhood, and even though I have a Robinhood account. But again, at the end of the day, you're getting really high sale prices. SoFi is not going to go to zero. Palantir is not going to go to zero. ARKK is not going to go to zero. GME is not going to go to zero. AMC is not going to go to zero. I mean, there's some shareholder value. There's some value there. The thing is the price. The price spiked up so fast. Again, we had a flood of new IPOs. That's money coming into the system in terms of trying to suck out the money from all the other ones. So again, when you have an IPO from a new company, what happens? Everyone's trying to buy them, right? Everyone wants to get that new hot IPO. Very close to correlation to the 2000 tech bubble, where a lot of companies won't survive. Again, I don't know SoFi's books personally, but I highly doubt they'll go to zero. If they go to zero, fine, so be it. But again, if you're willing to roll the dice and you're going to get a little small slice of your portfolio, take a look at the names like an Upstart. Take a look at the names like Blink or a Riot or a Space that maybe you want to roll the dice and not seeing it as an investment, but as a flip down the line. I mean, you're getting it at prices not seen since their IPOs in a sense. Sometimes even less than their IPOs, or sometimes even lower than their rock bottom prices. Again, we've seen this with Black Friday shopping. People love to shop when prices are low, but the stock market is different. People want to buy when it's high, not when it's low. Weird, oddly enough. So, but that's kind of the psychology of the stock market. We kind of do things backwards. SoFi is a long-term term. It'll be at $20 again if the market does turn on. I think basically at a point of just a shakeout. I think that Bill Ackman likes a Netflix. I think Netflix has been doing, but not the best price action. There's going to be some value there on some other companies. Again, could some die out or be acquired? Sure, there could be some acquisition out there. Totally not out of the realm of reality. But at the end of the day, will some of them survive, or will they all die? Not all of them will die. Some will merge and acquire. Or be acquired, that's fine. I mean, obviously SoFi has some kind of value if it's still priced in the market at $11. But again, they're all rolling in one. A lot of people are selling these high flyer names that did well in 2020 and 2021. And what are they doing with that money? Well, that remains to be seen. More than likely, probably buying names that are higher quality, like a Microsoft and an Apple, which went up. But again, at the end of the day, a lot of fundamentals are out the window here. But again, you can see the names that did well today. Microsoft did well, ExxonMobil. I remember when ExxonMobil was trading in the low 20s. And remember when oil was at negative? Again, guys, these are cycles. Now everyone loves oil. Of course they do. So remember when oil in 2019, when it went negative on us? Literally negative oil. They were paying you to take a barrel of oil. Now it's near $100 or near $90. So again, it's ebb and flows, guys. The saying goes, yesterday's price is not today's price. Always different. What's on the radar for next week? Well, radar for next week, really we're looking at the non-farm payroll report. I want to see how Friday closes in terms of futures. Do we hold this support of 42.60? If it does, then we can start making our assessments moving forward. If you look at IWM and the small caps become interesting because they are in a bear market. And they're the first ones to fall, the most violent ones, and they're smaller caps. When they bounce, that's usually an indication of the bottom. What would be a bounce level? What would be like we're out of the woods on a IWM? 210. If we make it to 210, that really, or I would say 215. If 215 hits on IWM, which is the small caps, really everything's back to normal. What is normal anymore? But the fear is basically done. I think we're overdone, in my opinion. Most indicators have shown way oversold conditions, but a lot of people get scared because we panic and they don't want to buy the lows. That's what happens in March 2020 when I bought stock. But again, I mean, I'm different. What can I say? DraftKings. I love DraftKings long term. DraftKings had a really great day the other day. You could see that pop that it had. If I go and bring up the hourly, we did have a nice pop to 22.5, came back down, filled the gap. Again, I believe Morgan Stanley did the upgrade on them, but you could see here, nice gap up. It just filled it. It just filled the gap to the upside. I love the idea, or not the idea, the change in terms of kind of the market or the United States getting into sports gambling. I've seen a lot of commercials for Caesars and all that stuff like that, DraftKings, FanDuel, and all that stuff. It's starting to get more accepted. Is it ugly today? Yes, but I think I'll be a happy camper 5 to 10 years from now as I hold it. Same thing with Palantir and those names. But again, I can handle having those kind of small betas, aggressive ones. They're not a big part of my portfolio. Again, the idea is don't put all your eggs in one basket. Now, I did that for Apple, but Apple is a little different. They're a little more stable and profitable, obviously. But DraftKings, I would not go all in on. No, not at all. But again, that's just my opinion. Under 42.60, what's the next support on SPY? Let's go ahead and take a look. If we do break those lows, which is right around 424, let's just call it. Yeah, 424 would be the next level down. That would be equal to 42.60, let's say. If we start breaking that, that's where it gets really interesting. Then we're going to get to around 415, and then you have to short. I mean, there isn't going to be a bounce there for the time being, but we're still holding up. I really do believe that this is the low. I keep saying that to myself. Maybe I'm trying to convince myself, but I do believe it's the low. Why? Because the last time we didn't bounce right away, guys. Back in September on SPY, we didn't bounce right away. We consolidated for a couple of sessions. You could see we broke down to that support 1, 2, 3, 4, 5, 6, 7 days, 8, 9, 10, 11, and then 12 sessions. So it took about 12 sessions. We're really around the 4th session of these range lows. As long as we hold above, the longer period of time we hold that support, that risk, the risk reward is to the upside. That's where you want to look at. So again, you can see on SPY, see the little cluster there? It always happens in clusters, bottoms. Bottoms happen in clusters. You could see right here. I'll expand it a little more. But you could see a cluster here. We're starting to kind of be here. You could see back in December, November, December, 1, 2, 3, 4, 5, 6, 7. And then the 8th day we boosted. We had 1, 2, 3, 4, 5, 6, 7. Boosted, came back down a little bit, kind of a dead cat bounce. Another 4, so that's 12. And then we ignited. Back in here, we had on October, we had about a 4-session low. Right here, about a 4-session low. Here, about a 4-session low. Here, about a 1, 2, 3, 4, 5, 6, 7, 8, say 8-session low. We're at the 4th. So if you want to use a sports analogy, we're pretty much in the 4th inning of this kind of craziness. The 4th inning, 9 innings in baseball, right? And you can see this cluster here about 4, here about 7. So again, it consolidates over time. Again, that's usually indicative of a bottom short term. So again, I'm not saying we can never fall. I can't guarantee that, but it looks closer to a bottom than anything else because based on past performance, I know we can't say that often, but even here, even the COVID lows, you could see consolidation. Now, it could be right here back in March where we had the actual drop after the consolidation, but we're not in COVID, we're not in lockdown either. So again, you could see even in April after COVID, it took about a good month for that consolidation to end, for us to get up higher and then to consolidate, go higher. Before any measured move to the upside, we always get some kind of consolidation for right around 5 to 8 sessions, sometimes maybe 9, sometimes maybe 10. But again, it seems pretty, I hate to say the word textbook, but it seems pretty decent to look at in terms of how much, where we can go moving forward. So again, you're kind of running out of room if you're shorting. You're kind of running out of real estate, let's just say. Again, if you're looking to short, more than likely it's going to be right around to 424. Below that, if that happens, well then, again, I could be wrong. Again, all bets are off. But again, this kind of consolidation, we had this back in December too. We had this in late December, and then we ignited up. So again, you get the consolidation over time. Again, you could see that tightening of that range here on SPY. You could see it here. Super tight, but not super tight, maybe around $13. Here the same thing, right around that kind of level, around $6, $7, $13. That seems to be right. I think we're at the bottom. and I think 424.75 holds on SPY. Again, if that breaks, then all bets are off. Then we can get to around 41 something. Again, doesn't mean end of the world, but it means more pain. We'll see where we go from there. 42. Let's see. Did you buy Tesla today? I did buy Tesla today. I did right around 902. Now again, it's down, but I mean, from 902 to 829 wasn't the best trade, but an investment, sure. Below 800, I will buy some more, no problem. And that would kind of average out the buys to around 850, not the end of the world. Wish I had some extra cash to buy more Tesla today. Congrats. Yeah, I've been holding some cash. I did sell my car that I had, not for any particular reason. It was a trade-in. And I made some money on that. So I sold the car to Carvana, and I had a little extra cash, so I went ahead and just invested it. I bought some more SPY-G today. I buy SPY-G every Thursday, so at least that. But again, you kind of want to have some dry powder. You don't want to be fully invested either. Always have your emergency fund, have some cash on the side, and you'll be okay. But again, I think a lot of people either go fully 100% on high betas, or they don't have any cash. Remember, guys, understand how important it is to have some cash reserves. People say cash is trash. It's not true. Cash is fine. I wouldn't be 100% cash because that wouldn't be smart. But again, it's all about balance. At the end of the day, you always want to have some kind of cash when you have a great sale. You don't want to be fully invested in anything. You know, you can't eat with stocks unless you're getting a dividend. I mean, you can't buy groceries with stocks. You can't just go to the grocery store and say, "Here, I have an Apple share. How much can I buy?" It doesn't work like that. So always have some kind of cash, guys. Think ahead. All right, guys, we'll go and leave it there. I would say you're a big balance here as long as the price allows it. But what are your thoughts on all stock-based compensation, insider selling? Share dilution is killing the share price. Yeah, the share dilution is killing the share price. I agree. But I like the business moving forward. And again, they're not going to use cash for compensation. But Tesla did the same. Remember, Elon was getting a ton of stock options. He was getting paid all in stock. He wasn't making any kind of salary. I mean, how many shares does Tim Cook get? So again, it kind of is apple and oranges. But again, stock compensation, I other than the insider selling, which is not the best, but again, stock selling to insiders or giving stock compensation really just shows that confidence in the company over time. I think Palantir is going to be one of those names down the line. We'll have the discussion. It'll be in the same range as a Salesforce.com and an Oracle, or maybe even a Google. I don't think it will get as high as Google market capitalization, but it'll be up there. I think Palantir is great. I'll wait for below $10 and I'll buy some more. Bitcoin fixes that. True, Bitcoin does fix that. Nice, man. Good on you. I'm working on some stuff at the moment. Got to pay off the debt first. Paying off your debt is the best thing you could do. Best investment you could do. You get instant return on your cash. So yes, that should be your focus. All right, have a great rest of your day, guys. Thank you so much for joining me. GARcapitalfx.com is the website. And we'll catch you on Twitter throughout the day. Let you guys know what I see. Always follow me on our blog at G.A.R Capital on Twitter. Have a great rest of your evening. I will catch you guys tomorrow for the morning note. This is always fun with you guys. Thank you so much for joining me. I get a lot of great comments saying thank you. I love the videos. We do it for you guys, and it will always be free. You may have an ad here or there, but you can always skip it. Have a good one, guys. Cheers.